For 11 straight years, the same amount left her account every single month without fail. Same bill, same deduction, quietly pulled from her Social Security check before it ever landed in her bank. She never questioned it. She assumed it was just part of the deal. Then her daughter sat down with a stack of old statements, made a single phone call, and spent 20 minutes on the line. When she hung up, that bill was completely gone, not lowered, not adjusted, wiped out entirely. 11 years of payments she never actually owed, because no one ever sat down and told her she had the right to stop. That story is not an exception. It is happening right now across the country to millions of seniors who are quietly paying bills that federal and state law already says they do not have to pay. Today, we are going through 5 of those bills. Some are only available if your income falls below a certain level. Others apply regardless of what you earn or what you have in the bank. And the last one, the 5th one, is the one that tends to hit comfortable middle-class retirees the hardest. People who would never qualify for traditional assistance programs. People who assume that kind of relief was never meant for them. They are wrong, and we are going to prove it. Stay with us, because around the 6-minute mark, we are going to show you something that changes the way you approach all 5 of these bills at once. These programs are not separate, isolated fixes. They are connected in a way that means resolving one can automatically cancel out 2 or 3 others at the same time. That is not an accident. That is how the system was designed, and most seniors never find out until someone lays it out exactly like this. Before we get into the bills themselves, drop your state in the comments right now. We want to see exactly where our viewers are watching from. And here is the most important thing to understand before we start. Being legally exempt from a bill and actually not paying that bill are 2 completely different situations. The government does not issue automatic refunds. No check shows up in your mailbox. No agency calls you to say, "Hey, we found something, you've been overpaying." The programs exist, the applications are sitting there waiting, and every single month that goes by without you filing is another month of money leaving your account for something the law already decided you should not owe. The companies and agencies collecting these payments are not cheating you. They are simply doing what they are allowed to do, which is keep collecting until you tell them to stop. And they are counting on one thing, that you never find out a better option exists. Every single bill we cover today has a path for both groups. If your income is modest, there is a program for you. If you are a comfortable retiree who never thought any of this applied to you, there is a program for you too. Nobody watching this should be able to walk away saying, "This one wasn't for me." Bill number 1, the Medicare Part B premium. Every month, $185 is automatically deducted from your Social Security payment. Most seniors look at that line on their statement, recognize the Medicare label, and move on. They assume this is simply what healthcare costs after retirement. They never consider whether it could be otherwise, and so the deduction keeps happening month after month, year after year. Here is what they were never told. There is a collection of federal programs called Medicare Savings Programs, and their entire purpose is to pay that premium on your behalf, not reduce it, not offer you a coupon. Pay it in full so that deduction disappears from your Social Security statement completely. The most comprehensive level within this program is called the Qualified Medicare Beneficiary Program, or QMB, and it does not stop at the Part B premium. It also covers your deductibles, your co-payments, and your co-insurance. Everything Medicare would normally ask you to reach into your pocket for, gone. For 2026, the income threshold sits at approximately $1,352 per month for a single person and $1,824 per month for a married couple. If your income runs slightly above those numbers, 2 additional tiers, called SLMB and QI, will, at minimum, eliminate the Part B premium entirely, even if the broader benefit package does not apply. And here is something worth emphasizing. The income thresholds were updated for 2026. If you looked into this before and were told you did not qualify, that answer may no longer be accurate. Check again. Numbers changed, eligibility doors that were closed may now be open. To apply, contact your state Medicaid office directly or visit Medicare.gov or call 1-800-MEDICARE. Quick question for the comments. Did you know a federal program would pay your Medicare Part B premium in full? Yes or no? Drop it below. Bill number 2, prescription drug costs. This one affects nearly everyone enrolled in Medicare Part D, and yet most of them never realize it does not have to be this way. They pay the monthly premium, they pay the annual deductible, they pay co-pays at the pharmacy counter, and absorb them into a fixed income budget that was never built to handle them. It feels like just how things work. There is a federal program that restructures the entire picture. It is called Extra Help, also known as the Low-Income Subsidy. Under Extra Help in 2026, there is no Part D premium, no annual deductible, and the absolute maximum you will ever pay for a brand-name prescription is $11.20. Compare that to what seniors without this benefit are currently paying: $50, $80, sometimes more than $150 every single month for a single medication. The difference is not small. For many households, it is the difference between filling a prescription and skipping it. The income cutoff for Extra Help is approximately $23,940 per year for a single person, roughly $2,000 per month. This is not a program reserved for the lowest income seniors. It covers a meaningful portion of the middle range, and many people who would qualify never think to look. Now here's the connection we promised earlier. If you applied for the Medicare Savings Program in Bill 1 and were approved, you are automatically enrolled in Extra Help. No second application, no separate process, 2 bills eliminated with one action. To apply on your own, go to ssa.gov or call 1-800-772-1213. Bill number 3, home energy costs. This one has been getting worse. Home heating costs rose approximately 9% over the previous year. Electricity bills increased by more than 12% across many parts of the country. For a retiree on a fixed monthly income, that is a real and growing hit, one that does not stay contained to winter. It compounds throughout the year, season by season, in both directions. The federal program designed to address this is called LIHEAP, the Low Income Home Energy Assistance Program. What LIHEAP does is pay your utility company directly, not a rebate, not a reimbursement check you have to wait for. A payment made straight to your gas or electric provider on your behalf before the bill is even due. If you are a single person with annual income at or below approximately $22,000, there is a strong likelihood you qualify. And if you are 60 years of age or older, most states give you priority access, which means you can apply up to a full month before general public enrollment opens. That matters more than it sounds. LIHEAP operates on a first-come, first-served basis. When the annual funding runs out, it is gone. No extensions, no wait lists. Priority access means you get through the door before the money disappears. Connected to LIHEAP is the Weatherization Assistance Program, which goes a step further. This program will send a certified crew to your home to insulate walls, seal drafts, and repair or upgrade heating and cooling equipment, all at no cost to you. The result is not just short-term relief. It is a permanent reduction in your energy bills every single year going forward for as long as you live in that home. To find your local LIHEAP office and check on enrollment dates in your specific state, dial 211. It is that simple. What state are you in? Drop it in the comments. Let us see how many people here are currently eligible and have not applied yet. Bill number 4, the Medicare surcharge. Most seniors have never heard of. This one has a name, IRMAA, the Income-Related Monthly Adjustment Amount, but most of the seniors paying it have never encountered that name. It is an extra charge added on top of your standard Part B and Part D premiums when your income crosses certain thresholds. The surcharge starts at an additional $69.90 per month and can climb all the way to $419.30, automatically deducted from your Social Security check, often without a single word of direct explanation. Many people paying IRMAA do not even know the extra deduction is happening. They look at their Social Security statement, see a higher than expected amount taken out for Medicare, and assume that is just what Medicare costs now. Here is what makes this particularly frustrating. Medicare does not calculate your IRMAA surcharge based on what you earned this year. It uses your tax return from 2 years ago. That is the rule, a 2-year look-back, which creates a completely unfair situation for a significant portion of retirees. If you retired last year, your income likely dropped substantially. But Medicare is still charging you a surcharge based on the salary you were earning while you were still employed full-time. If you sold a home in 2023, or completed a Roth conversion, or received a one-time payout of any kind, your income spiked temporarily that year. You could be paying a surcharge today based on a single financial event that had nothing to do with your ongoing income and will never happen again. The fix exists. It is a form called SSA 44. The SSA 44 was created specifically for people who experienced what Medicare defines as a life-changing event: retirement, death of a spouse, divorce, loss of income, or a significant reduction in earnings for any qualifying reason. You submit the form, document your current income, and Medicare recalculates your premium based on what you actually earn today, not what the IRS recorded 2 years ago. The savings range from $69 to over $400 per month, and they are not temporary. Once recalculated based on your current income, that new rate follows you going forward, permanently. The SSA 44 is available for free download at ssa.gov. If your Medicare Part B deduction is currently higher than $185 per month, this form deserves your attention within the next 30 days. If your income dropped meaningfully in the last 2 years, retirement, a spouse passing, any significant change, hit the like button right now, because the SSA 44 may be the most valuable single form you file in 2026. Bill number 5, property taxes. This is the one with the largest potential dollar savings. It is also the one where the least number of eligible people ever actually apply. And it is the one that consistently surprises middle-class retirees who never expected any government program to be designed for them. Nearly every state in the country has senior property tax relief programs. They come in several forms, and understanding the distinctions matters. Senior exemption programs reduce the assessed taxable value of your home, which directly lowers your annual tax bill. Senior freeze programs cap your home's assessed value, so it cannot increase, meaning even if your property appreciates significantly in the market, your taxable value stays locked at the level it was when you enrolled. Circuit breaker programs are designed for lower-income homeowners and can eliminate a meaningful portion of your property tax obligation entirely. And then there are age-based programs, and this is the category that surprises people the most, that have absolutely no income requirement whatsoever. Texas is the example we always come back to, because it is the most straightforward. The moment you turn 65, state law freezes your school district property taxes at exactly the level you paid in the year you reached that age. Your home's market value can double, triple, appreciate dramatically over the next 20 years. Your frozen school tax does not move. No means test, no asset review, no income threshold. You qualify because you turned 65. That is the entire requirement. Florida, Georgia, Tennessee, Arizona, South Carolina. Each of these states has structured programs that can save eligible senior homeowners hundreds to several $1,000s per year. And the details vary by county within each state, which means the only way to know what is available to you specifically is to ask. Here is the action. Call your county assessor's office. Ask 2 questions. What property tax relief programs do you offer for homeowners who are 65 or older? And which of those programs are age-based with no income requirement? Write down the application deadline before you hang up. That one 10-minute conversation can lock in savings that will follow you for as long as you own that home. The 6-minute connection. How fixing one bill fixes the others here is what most people miss. And this is why we told you to stay until this point. These 5 bills are not independent problems. They are linked. And that linkage means that the work you put into resolving one of them can do double or triple duty across the others. Start with the Medicare Savings Program application for Bill 1. If you are approved, it automatically triggers extra help enrollment for Bill 2. One application, 2 bills addressed simultaneously. The income documentation you gather to file the SSA 44 for your IRMAA appeal in Bill 4. That is essentially the same package your county assessor's office may ask for when you apply for a senior property tax exemption under Bill 5. One documentation package, 2 applications submitted in the same week. And underneath all of it, there is a deeper financial connection. When any of these programs reduce your monthly out-of-pocket expenses, something important happens. Your need to pull additional distributions from retirement accounts decreases. When you pull less from those accounts, your combined annual income stays lower. When your combined income stays lower, more of your Social Security income falls below the federal taxation threshold. And when less of your Social Security gets taxed, your net income actually goes further. 5 bills, 1 connected system. Fix one, and the others become easier to fix, and in some cases, fix themselves. Your action plan for this week. Here is exactly what to do, in order, starting now. Step 1. Call your state Medicaid office and ask directly whether you qualify for a Medicare savings program under the 2026 updated income thresholds. Use the phrase 2026 thresholds specifically. If you checked before and were told no, check again. The numbers changed this year. Step 2. Pull out your most recent Medicare premium notice. If your Part B deduction is higher than $185 per month, go to ssa.gov right now and download SSA Form 44. This is not something to put on a to-do list for later. Later costs you money every single month. Step 3. Dial 211 this week. Ask about LIHEAP eligibility in your state and whether senior priority enrollment has opened yet. If it has, apply before the general public window opens. If it has not, find out exactly when it does. Step 4. Call your county assessor's office. Ask about senior property tax exemption programs and freeze programs. Ask specifically which ones require no income test, just age. Get the application deadline in writing before you end the call. One final warning. While you are pursuing these programs, scammers are actively working the same territory. Right now, seniors across the country are receiving calls from people claiming to be government representatives who offer to enroll them in all 5 of these programs at once for an upfront processing fee. That is a scam. Full stop. Not one of the programs we covered today charges a fee to apply. Not one. No legitimate government agency will ever call you offering to handle your exemptions in exchange for payment. If that call arrives, hang up immediately. Then contact each program directly using the official numbers we gave you today. Have you been paying any of these 5 bills without realizing you might not have to? Which one surprised you most when you heard it? Leave your answer in the comments right now. Real situations from real viewers are what shape the investigations this channel pursues next. Everything covered today is rooted in federal Medicare guidelines, IRS publications, and active state property tax law. This is not obscure information. It is documented, available, and already working for people who found out about it before you did. More of this is coming. Subscribe so the next one reaches you before another month of unnecessary payments goes out. The system has rules. You deserve to know every single one of them. Take care of yourself and take care of each other.